All right, we are live. Thank you so much for joining me. I debated, I have to say, if I should do a uh if I should do a live stream the day before Thanksgiving. And I'm thinking, you know what? I've got stuff to say. And if you're watching this and obviously you want to see it, you have time for it, and you enjoy this kind of thing. And I really appreciate that, by the way. If you have any questions about the content that we talk about from investing, stock market, personal financing, if you want to talk about the Federal Reserve, politics, bring it on. Hit me up in the comments. That's where you ask your questions. I'll see them, I'll answer them. We'll have a nice, lively speak and a debate. And, if you want, you can always, jump on with me too. If you want to jump into the live stream with me, if you are bold enough. Remember, it's live and I don't edit. So what we say, what we do here, you know, is permanent. It doesn't go away. And it takes a fair amount of bravery to do a live stream like I'm doing now. I don't script them out. I don't read from a teleprompter. I just hit the live button and I go. I try to do this at 4:30 right now. It's 5, but look, it's the day before Thanksgiving. I do want to give a good wrap for the week, good wrap up. It was a pretty important week, even though it's a short week. And there are two very significant things going on. The Fed minutes today and a possible national railroad strike. And that would be just crushing for the economy. It would be crushing for consumers. It would be crushing for anybody who takes medication, for anybody who likes to eat, for anybody who likes to buy or do anything, because ultimately everything we have has either been on a rail or a truck, but usually they're on a rail first and then a truck. Plus, we could put a lot more trucks in the road because if our rails are down. Anyway, let's roll a quick intro. We got a quick update in the market and talk about the stock of the day today, which is something that I hate giving more oxygen to, but stock of the day today is just a common stock that you hear about every day. So let's roll the intro and we're going to talk about the Fed minutes. These are the minutes that come out a few weeks after the last Federal Reserve Open Markets Committee, and they said something significant which could really keep this little rally we've had going for some time. Here we go. All right. Thank you so much for joining me. We're going to take a look at a couple of things today. First, we want to just do, well, we'll do the stock of the day first because today it's kind of boring. I want to get it out of the way, but you could already see it. It's on the screen. Let me make this, let me make this a little bigger. Um, that's not what I really wanted to do. And don't you hate that when you hit the wrong button? And it's like, don't you when you hit the wrong button and it messes you up? Okay. Okay, that's it. So Tesla was up $13 today, up about 8%. Now, keep in mind, this is just about $220 a share about 2 weeks ago. And people are trying to decide what to do with it. You have a completely distracted uh, CEO who owns Twitter, Elon Musk, and he's spending a lot of time throwing out names from Kanye West or Ye to Donald Trump, and he wants. I think he wants the controversial figures back onto the platform because it makes it interesting. It does make Twitter. Well, Twitter has already become a cesspool and a circus, and as a result, it might be more fun to hear about it and see it and talk about it, and it makes headlines when major important people like politicians tweet. But if you're an advertiser, you don't want that. You want to avoid Twitter. And since Twitter is trying to make money as an advertising platform, we're trying to figure out what he's trying to do with it. But the point is, Twitter's not even publicly traded. It's not going to be a part of your portfolio. And I'm really sick of talking about Twitter. And it's not significant to any of my clients' net worths. How However, it does have to do with Tesla. And if I was a Tesla shareholder, I'd be a little pissed that Musk is spending so much time at Tesla, while at Twitter, while my Tesla stock is going down. And Tesla needs to focus on cars. There are a lot of good cars. The Hyundai Ioniq is a hot hybrid selling like crazy, and GM is coming here with hybrids. There's a lot of competition now, and it's good competition. I mean, competition is good, but Tesla, you know, I think Tesla needs to worry more about its ownership of the EV market than Twitter, and I think investors are getting shortchanged who are Tesla investors. So Tesla's the stock of the day because it did have a pretty big rebound today, and we'll see if it lasts. But it's just going to court controversy constantly, and I don't think that really stops anytime soon. Let's take a look at how the stock market did today. So modestly up day and light volume. Dow up almost 100 points. Nasdaq up over 100. Not a bad day for Nasdaq. S&P up a little bit. Gold has been moving up a little bit. It's in the mid 1700s, right there in the middle at 1750. Um, you know, it was 1900 for the longest time in the 1600s. Let's see if we can get some movement out of gold. But oil tanked down to $77 today. And, I'm people just love to turn oil into a total political thing. What's going on in oil is the reflection of so many things for the last 50 years. This is, I'm telling when people start saying, well, it's because of this, because of that, with always regard to politics, it's like, no, there's a war going on in Ukraine. Russia's a major oil producer. But if you really want to know what's going on with oil, I'm going to tell you what's going on with oil. I've talked about this before. Okay. The world order is changing. Major oil producers like Saudi Arabia and Russia and Iran, they see a threat to their well-being, to their survival, because of American oil, because of technology, EV, solar. That stuff is coming, and it's not slowing down. It's going to speed up. All right. And I still see people who don't believe in EVs and solar. They still think it's not significant. It is significant. 5% of all new cars today that are sold are EV. Soon it's going to go up higher and higher. And a very small percentage of cars on the road today are EV, but that's going to follow. That's going to be a lagging indicator, I think, for obvious reasons. But, but oil producing countries' way of life is being threatened. And it's going to cause volatility, hiccups in the world order. And it's going to get countries to act out in certain ways. Some countries will embrace community, and some countries will embrace separation and war. It certainly is Russia's path. So, that's really what's going on with energy. Okay. And we are producing more oil now than we've ever produced before. But there's a lot going on in markets and the movement of money. There's so much going on right now that it's hard for us to get our arms around this. But I even question the utility of having to know everything. I'm a total news junkie, and what I still find is that long-term investing, controlling what you could control, like dollar cost averaging, investing in your 401k plan, or if you're already fully invested and you're not investing new money and you're close to retirement or in retirement, what you could control is your percentage of money that you keep in cash ahead of your financial obligations. Don't wait till the financial obligation comes and then sell stocks, because they could be down. And if you have to sell more stocks than you anticipated, it's harder to recover when the market goes up, and you get into something called the negative sequence of returns. You need to have stable assets like bonds, and you need to make sure that you could afford to take the risk on super speculative products, things like crypto, for example, which we've been talking about a lot. Okay. By the way, Rita, thank you very much. Happy Thanksgiving to you, my friend. And I am grateful to you, and thank you so much for all of your help and your friendship. And just, without you, I could never have made it this far with the live stream and the show. And I owe you a debt of gratitude, and I really appreciate you. I see Alina is out there too. Thanks for joining me, Alina. Anyone else who's out there, you're watching, give us a thumbs up. This way, it helps to spread the good word about the show. The rest of your social network could see that you're watching it. Maybe they'll tune in sometime, or hit me up with your favorite emoji. Hit me up with an emoji or something in the comments. It's good for engagement. Ask me your questions. Say hello. Wish me a happy Thanksgiving. I'd like to wish you a happy Thanksgiving. All right, so let's move on. I'm not really big into saying, like endlessly, the year in review, what happened last year, what happened January 8th last year, in 2022, what happened, March 17th. I don't like to get into those. I don't think it's that useful. If there's mistakes that were made, you want to learn from them, of course. But I do think it's good to cover the broad strokes. This is a tough year for investors, not necessarily because of, thank you for the heart, Rita. Thank you so much. And we got Slim Dog. Have a great Turkey Day. You as well, Slim. Thank you very much. Don't eat too much stuffing, or else we're not going to be able to call you Slim. No, wait, hold on. I know it's a bad joke. All right, thank you. Anyway, where the F was I? Man, oh man, when my ADD kicks in, I'm like lost in the sauce. Oh yeah, years in review. But I think we have to talk about what was significant. And this year, what was significant is that bonds did so poorly. So I'm not talking about investors who are just all stocks, but if you're a diversified investor, diversification is a strategy that we use to mitigate risk, but it doesn't protect your portfolio from going down in a generally down market. Whew. But bonds were down a lot this year. So you figure you have some stocks, you have some bonds, stocks go down, bonds go up. It helps balance out your portfolio, keep your portfolio steadier. That didn't work this year because bonds were down so much this year too, because the big story of the year is interest rates. Whatever anybody tells you the story for an economic story, granted for a human story, it's the war in Ukraine this year. But from a purely economic standpoint, it's the rapid rise in interest rates. It's I think the Fed has hiked interest rates 5 times this year so far, 4 of which have been 0.75%. They're expected to hike in about a week, another 0.5%. And then the next meeting is in February, I think February 1st. And then we get into quarter point hikes. So let's talk about what's important today. Okay, so we talk about what's important this year. Let's talk about what's important today. The minutes from the last Fed meeting came out, and the Fed appears to be leaning toward lowering its interest rate hikes. They want to see how the last 5 or 6 interest rate hikes have affected the economy. They're concerned about breaking something. And what they want to do is see where we are. So we might start to get to quarter point hikes. So first, we slow down the pace of hiking or reduce the rate hikes. The next thing would be to stop, pause on the rate hikes. We just leave the rates where they are and then hopefully pivot. And by the end of 2023, it's possible that the Fed could start cutting rates. About 6 months before that, so maybe mid next year, we are in a new bull market. We could be in a new bull market right now. I know people keep talking about the bear market, the worst case scenario, how bad things are. But I think people have to remember that let me rephrase that. I think people have to remember that good things can happen too. We have a tendency to get into our own heads and say, things are good, they'll continue like that forever. Things are bad, they'll continue like that forever. Be optimistic. I'm not saying be willy-nilly or don't have any risk management or invest over your skis. But as you can see, the market's coming back. There are some pretty good things happening, but the Fed is now talking about easing up on its rate hikes. This is a very big step. It's a very big step. I don't want to, I can't overestimate or overstate how important that is. So, and for those who decided to sell out of the market completely and wait for better times, well, here we are. The market's rebounding. The S&P 500 crossed over 4,000 yesterday. The Dow crossed over 34,000 yesterday. And I know this sounds crazy, but if you look at the math, you look at the all-time highs of the S&P and the Dow, we're not that far. We could conceivably hit new highs again. The question is, will it be on the same stocks? You know, if the S&P goes up, is it going to be based on Apple, Amazon, Meta, the old Facebook, Alphabet, the old Google? Is it going to be on the same stocks, or is it going to be on a different group of stocks? I noticed drug stocks are doing well. Bank stocks are doing well, even though energy stocks are off today. They've been doing very well. So typically what happens is you get a new bull market, you get new stocks that lead the way. I know it sounds funny because people are running into the same old stocks from last bull market, but like they say, the generals are always fighting the last war. Okay, let's take a look at bonds, and just to show you where everyone's head is at. Okay, bond yields are starting to come down. Now, if you take a look at the 10-year, it's got a 3.6 handle, okay? 3.6 and change. This is just over like 4.1, okay, 4.1% recently, like 2 weeks ago. That's a very big drop in the 10-year yield for the bond market for the 10-year. And people are sensing that inflation is going to slow down. The economy is going to slow down. It's telling you a lot. But if you look at the 10-year at 3.6 and the 2-year at 4.4 and the 1-year at 4.7 and the 6-month at a 4.7 yield, okay, you're talking the 6-month and the 1-year are a full percentage point, more than a full percentage point above the 10-year. That's as steeply inverted as yield curve. I don't think I've ever seen a more steeply inverted yield curve, and I've been doing this for over 30 years. That's telling you that the economy is set to slow down. It's telling you that there's stress in the economy, loss of confidence in the economy. It's telling you that the Fed's going to have to pivot. That's the general feeling. It's one of the reasons why stocks are starting to act better. Yields are coming in. Mortgage rates are coming down. Mortgage rates week over week finally peaked up a little bit, up just barely, but up a little bit. Don't be overly negative. And for those who thought it was a good idea to put all your money into a 1-year or 2-year T-bill, don't do all or none decisions. We need to talk about that. It's a big thing. Okay, so it's the Federal Reserve. And what's the other big thing? Let's just take a quick look at crypto. Okay. Cryptos have been doing well. And I think part of the reason that crypto is doing well, even with the blow up of FTX, is because, well, crypto does well when interest rates could start coming down and when people think the Fed will ease off the brakes. Crypto is very sensitive to that. I've said the worst thing in the past, for crypto is a Federal Reserve that's gotten religion about fighting inflation, which it has. So crypto tanked. When the Fed eases off the brakes, even it maybe taps the gas pedal a little bit with an interest rate cut, that's very good for the most speculative assets, which at this moment anyway, includes crypto. So that's what we're looking at. All right. So that's not what I wanted to do. This is what I wanted to do. Okay. So crypto is up nicely altogether. Bitcoin up nicely, bouncing off a 2-year low. Okay. And let's take a look at the next big story. And this is the next one. I said there's 2 significant things, the Fed minutes today. Now here's the next one. Then I got to get out of here. With unions aligned, the timeline for a rail strike and railroad emergency prep is now clear. This is huge. Okay. Lori Ann LaRocca, who I actually know and I've met a number of times, a very nice person, excellent journalist. Okay. A December rail strike, the Brotherhood of Railroad Signalmen. Okay. This is it is extending its status quo period through December 8th. We could literally see the strike come December 9th. Okay. Let me explain what a national railroad strike could do, because it's kind of frightening. But chemicals, coal, iron, you name it, stuff goes on rail and then it gets distributed to trucks. The longer something can travel on rail before it goes on a truck, the better, the cheaper it is to transport, the more efficient it is to transport. If we have a railroad strike and that it's expected that the president, who has the power to intervene in that, will do it. I think he might need backup from Congress, but I don't see why Congress wouldn't back him up. Okay. But the economy, you're talking about the economy shutting down, and you're talking about this costing the U.S. economy over $2 billion per day. And again, forget, medication, medical supplies, like stuff that we really need that we just expect we'll have. It's all stops. You think about it, cameras, to cell phones, to glass, to steel, construction materials, just everything goes on a railroad, and it just really would just be a disaster for the economy. So, and then after that, we have the debt ceiling coming up also. So we got a couple hurdles to clear. Now, I'm not one of these people who says we still have hurdles to clear, or we're not out of the woods yet. We will get past this stuff and things will be okay, but we're going to have to go through hell to get there if we have a railroad strike and we default on the national debt. That's not what I wanted to get into today, but it is something that is a potential issue on the horizon. All right. So that's the story today. Fed getting easier, looser, acknowledging that it's slowed down inflation, slowing the economy. You want to see what damage it has done to the economy in terms of a slowdown. And then we have a potential rail strike, which would be huge and hugely terrible. So those are the two big things. But other than that, the market does have a feel like things are improving a little bit, because things are getting worse in the real economy, especially lots of layoffs in the tech sector. I know it's bad news, but bad news is actually good news, because the Fed then stops raising rates and maybe cuts rates, and that's good for the market. That's what we're talking about here, the market. Okay, we talk about the economy a lot, but it's the market that we're talking about, and the market and the economy are not always the same thing. Have a great, happy, wonderful, joyous, easygoing Thanksgiving. Enjoy, eat everything you want. It's your day. It's our day. I love this holiday. And I'll probably be around over the weekend doing a live stream. If not, all right, there's nothing really going on. And keep an eye out for my content. And thank you all for watching. I am thankful to all of you. Have a great one.